Hey guys, how's it going, and thanks for coming. I'm Nick and this is Real Life Money. If you like this topic, don't forget to subscribe for more. So a billionaire hedge fund manager, Ray Dalio, has been talking about a recession in 2020 and his perspective. So the outline in this video, we're going to be going over that, what he personally thinks, and some recent examples that could support it possibly happening very soon. Next, we're going to go into the possible strategies that Ray Dalio is going to suggest anyway, so you could avoid losing money in the next stock market crash. And at the end, something a little interesting, we're going to be talking about possible bubbles that are out there that could lead to the next stock market crash. And that could definitely be fun to talk about. I mean, not fun to live through, but you get the idea. So if you're not aware of Ray Dalio, he is a billionaire in the hedge fund industry, like one of, if not the top hedge fund manager out there. He released a book called Principles that goes over the principles that he learned throughout his life, and also released a recent article originally on LinkedIn of paradigm shifts. I would definitely recommend it. I actually did another video going into detail about that. But he definitely has information out there that we could all learn from. Now, the interview that he just went through, he said there is a 25% chance that there will be a recession in 2020. Now, everyone has different perspectives, everyone has different ideas, and no one really has a crystal ball of what could possibly happen. He did say 25%. Other people are saying different things, other hedge fund managers, economists and everything. Could be like the last inning. So it really depends who you talk to. However, it's definitely good to prepare. Now, the definition of a recession is 2 consecutive down quarters. So we're kind of waiting for that. It hasn't happened yet, so that will technically be the start of a recession. Some examples that support a recession in 2020 are, you probably heard of it before, the inverted yield curve. We just went through that, kind of up and down through that. There was a 2-year and the 10-year did invert. The only times that has happened is previous recessions. Now, something that no one is really talking about, and I want to give a shout out to another channel that goes into this stuff every single day. But his name is Gregory Mannarino. I'll leave a link in the description so you could check him out. He is fantastic. He goes over everything that's happening every day. He has at least 2 videos a day before the market opens and after the market closes, and he really dives into this. But he did mention that the Fed is going back into quantitative easing. It hasn't been announced, but you could check this chart right here. You could see they have been steadily declining for a while now, but only recently, the beginning of this month, they're actually starting to buy more treasuries. That's what happened in 2008 or so, like that area. Again, he's great. Definitely recommend checking him out. Now, to prepare yourself, what Ray Dalio is popular for is his all-weather portfolio. And the reason for that is because there are essentially 4 different seasons in the market. The economy could be growing or it could be falling. Those are 2. And then the other factor to look at is inflation. There could be increasing inflation or decreasing inflation, also known as deflation. This strategy was originally announced in Tony Robbins' book, Money Master the Game. I'm rocking my book right here, bam. But I'm going to give you the information of the idea of the all-weather portfolio. So like we said before, if the economy is rising, there's growth in the economy, then stocks, corporate bonds, and commodities and or gold is the investment to hold. Now, if the economy is falling, then more treasury bonds and TIPS, also known as inflation-linked bonds. Basically, if there's inflation, then the bond returns whatever the inflation is, let's say it's like 3%, it's going to give you an additional 3% to the face value. Now that's the economy growth side. Now let's talk about the inflation side. So if inflation is increasing, then the investment to be in would be commodities or gold, and also tips. Like we said before, if there's inflation, then these are kind of hedges against inflation, or essentially the dollar. And on the opposite side, if there is deflation, then the investment to be in would be Treasury bonds and stocks. Now this is the big moment, hopefully you guys can see, but this is the actual portfolio allocation of his all-weather portfolio. So this basically determines, you don't want to bet of what you could be right in, because chances are, like we've been wrong in the past, chances are we're going to be wrong in the future at some point. So instead of betting that you're going to be right, you probably bet on being wrong. And this is exactly what his portfolio goes over. So he has, get your notepads out and write this down, but there is only 30% in stocks, which is actually very low compared to other people's allocations. Then he has a huge holdings in bonds. He suggests 40% in long-term bonds and 15% in intermediate or like middle of the road, like medium-term bonds. Now the other 15% is split in half. 7.5% should be in gold and 7.5% should be in commodities. Again, so the reason for this, if the economy does drop, then stocks would fall, and then other parts of the portfolio will hold it up, so you do not lose as much as you would normally. So bonds could hold it up, and gold usually skyrockets during a crash, and that's why he recommends it. A lot of people do not like gold. However, if you are aware of history, gold does hold its value, especially in an inflationary economy. Now to give you like an actual example of how a portfolio similar to this, like just diversifying a bit away from stocks, because especially when you're younger, you really don't care about it. You know, you want to put everything in stocks because that has more returns. However, look at this portfolio. This is basically a bunch of everything like Ray Dalio's example. So more bonds, more gold, and cash. And this is what the portfolio actually does. So it actually drops, well actually it doesn't drop at all really. It definitely drops less than the overall stock market. And you can see it outperforms and holds its value over time. Now, over the long term, yes, stocks do outperform. However, if you do structure your portfolio in this way, there is less volatility, less risk, and then on the rebound, you could then kind of get back into more equity. So hopefully that kind of opens your mind up a little bit. It definitely helped me out because I just thought, put everything into stocks, that's it. You can do that, and you don't have to worry about it. If it's just going to sit there for like 30 plus years, go for it. However, looking at this, maybe, you know, it really depends how you want to play the game. But this could definitely help you avoid the risk of a drop. Now, what could be the main cause of this next drop? We're going to be talking about two possible bubbles in the recession, well, in the economy right now. Now I don't want to give like too much information, kind of just want to keep it a very basic level. Basic ideas so we all could follow this. But if you guys have seen the movie, The Big Short, if you haven't, definitely recommend seeing that. But that goes over, or based on, the investor that invested or bet against the stock market, or essentially the real estate bubble in 2007 and 2008. He made like billions of dollars, and he just recently came back out and saying that index funds could possibly be the next bubble. And that's really interesting, because if you're an investor in any kind, or if you're a beginner, you probably heard of index funds. You know, you don't know which stock to pick, so pick them all, right? You just pick an S&P 500 fund. And it's super passive, super simple. You could set it up easily. And a lot of people love that. That could possibly be the issue because so many people are getting into index funds. I could definitely see his perspective, especially if they are like inexperienced, and let's say the stock market does start to tip. Those people are going to get out of those funds and cause the crash even harder. So that could definitely be more of an exponential effect of index funds. And the other possible bubble, not talking about Bitcoin, although that's arguable, not going into that. However, I did hear a bunch of different economists and different investors did mention there could be a possible bubble in the bond market. And that's very interesting. Now, recently you did see the inverted yield curve. A lot of people are piling their money into treasuries because bonds are safer, right? Well, there are countries out there that hold negative yields, which is like completely insane. Imagine like lending someone money and you have to pay them because you lent it to them. It doesn't make any sense. But there are countries out there, and if we go into negative territory, which could definitely be possible, going to keep it basic level here, but if we do go negative, then these bonds, we're going to have to be paying interest on the bonds that we bought. So then bonds would not be attractive whatsoever, which is why Ray Dalio suggests to have at least some percentage of your portfolio in gold. It works well in inflation. It holds its value. You could preserve your wealth. So it might have been a lot of info. Tried to keep it slow and steady because that's how the race is won. But we went over some possible effects or when the economy could crash, starting with Ray Dalio. Next with his strategy of how to prepare, and then ending with some possible bubbles out there. So if you guys have any suggestions, any thoughts or opinions that could lead to the next stock market crash, do you think it's going to be in 2020, 2021? Do you think we're going to have another 10 years? I highly doubt there's going to be another 10 years, but you never really know. So that's why all weather, you're betting on yourself being wrong. So if you guys have any questions, comments, concerns, leave them down below in the comments section so we could talk about this, because we probably shouldn't be listening to the news channels out there. They don't know what they're talking about. We might. So thank you so much for watching, guys. Definitely appreciate it. And I do have other videos going into more detail of this stuff, especially Paradigm Shift by Ray Dalio that just put that out. He goes over like the possible transition our economy may be going through. But thank you again for watching. I really appreciate it. I'll see you in the next one.